Everybody, welcome to the show. So we got Sergio and Don and B and Nancy and Diane and Jason. Welcome everybody. Dun, 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 dun. Google and Tesla earnings coming up. Not a lot else happening this week. Got earnings and just not a ton of other stuff. Got some existing home sales. Thursday, lots of international stuff, but as far as the U.S. goes, just unemployment claims, flash manufacturing PMI, flash services PMI. Not a lot. New home sales, and just not a lot this week. Core durable goods, and none of it seems to matter for this market that just keeps grinding higher and higher. And let me know what you think. Like, is anything gonna matter? Does it even matter? Hey, trading, good to have you. Tara, Ivan, Pierre, good to see everybody. Kimberly, my favorite subscriber, popping in, saying hey. Ah, boy, oh boy. Boy, oh boy, oh boy. Anyway, so this week, earnings from some of our biggest names here. And Google and Alphabet kicking it off right there. Alphabet and Tesla, excuse me. Alphabet and Tesla kicking it off. We did have Coca-Cola today, and DR Horton, GM, Raytheon, RTX, formerly known as Raytheon. And after the close here today, ISRG, SAP, Enphase, Matador, Capital One, Texas Instruments. And tomorrow, before the open, we've got GE Veranova, Amphenol, which makes connectors, AT&T, Thermo Fisher, Fiserv, General Dynamics, another weapons maker. And we have all sorts of, I guess, defense contractors up this week. Got Hasbro, after the close tomorrow. So we'll talk about Tesla's earnings curse specifically tomorrow. We've got Google or Alphabet. We've got ServiceNow, IBM, Chipotle, Quantum Scope, or Escape, or whatever, QS, Alaska Airlines, O'Reilly, which their stock price is ridiculous, along with AutoZone. And it's got a little bit of American Airlines up there. And it ought to be an interesting thing, I guess. Anyway, welcome to the show, everybody. Hot out there? Yeah, on my screen it says very hot weather. And temperature like 88 with it feels like 100 or something like that outside. Humidity is only like 250% outside. I think when it hits 300, it starts raining. That's a joke. Just kidding. Excuse my fellow citizens. Those are honking at each other. And if you hear any crazy noises, I apologize in advance. Let's jump in and look at a few things, shall we? So I was talking about this earlier. Rocket Lab, all the way up to target, pulling back. I need to see at least this big a pullback, if not that big a pullback, to get back interested in that. Now, talking about Google or Alphabet. It's kind of funny. Alphabet, and they put it in parentheses, Google. Now, we have rallied up to this gap down. We gap down from here into here. And now we're sitting right there, right at the bottom of the gap. Now, in case you're new here, I commonly hold that people are buying. They're buying right up into the top. And then they get stuck in a gap down. And then price goes further down. And they're like, oh, sugar, honey, iced tea. Maybe I should double down, triple down, quadruple down, right? Maybe double down up here. And now you got to double down again. Something, right? Now price starts climbing. And you're like, oh, yeah, come on, baby. I'm going to get back. I'm going to make so much money. And then this psychological thing happens when you get here. And you're like, you know what? I just want a GTFO. I want to get the fudge out. And so you sell. And you get out. And that usually causes price to decline. We see this happen over and over and over and over on gap downs. Now, people say, well, doesn't it work the same for gap ups when I talk to them? And think about it. Nobody is selling here and then watching it in this anticipation for the stock to come back down to there so they can buy back in. Right? That's just not the way it works. Sure, maybe short sellers get caught. Short selling is not the huge game in town. All right, like there's plenty of money that can be made in short selling, but that's not usually you're more active and you're probably trading these little doodads like this, not looking for that gap. All right, so filling a gap up, sure it happens, but that's not the way most stocks react. They don't fill that gap and then bounce. But many times we see, even right here, like this little gap down, like people are buying here, gap down, came back up, and sell. And then came back up to that same spot and grind and grind and grind and grind and grind, and then pop through, and then grind and grind and grind. It's just because there was another gap right there. People get stuck in these gap downs, and then they just want to get out. And it causes these areas of supply, which causes price to drop. So this big one that's sitting right up here is a big fat supply zone. Then when price gets up in there, it might cause price to react negatively. So far, not really pushing up through it. So be careful on Google. Earnings tomorrow. This has somebody out there, they're like, I am so bullish on Google. It's going to 215. I wish them all the luck. This is a bearish pattern. All this overlap that happened here on the way up to here. Be careful, please. It's your money. I mean, this could gap down. Now, looking at the expected move, in case you've never seen this trick before, you don't know how this works. Pop on here, say, all right, here's the next expiration after earnings. So between now and Friday, you have to sell the at the money right now, $191.34. So look at this one right here, 190. I mean, you can look at 192.50. We're kind of right in between. It's actually almost exactly in between. I mean, we could look at 192.50. So you take the bid here, $5. You take the bid over here, $6. Add them together, that's $11.20. So right now, and then add you can do the same over here, about the same, 10, 11 bucks and 10 cents. $11.20, $11.10. So somewhere around $11. That's what the expected move. All right. So if you didn't know, that's how that worked. You take this number, you're looking for the at the money, closest you can get. If it's not right on it, which it's never right on it hardly. Take the bid. That's the sell price on both sides. Add them together. 505 plus 615 equals 1120. Right there. That's the expected move. So X out of here. Go back to the chart. Say, all right. $11 up. Puts me right. 1120 up. Puts me right there. Grab the tool again. $11.20 down. Puts me right there. Missed it. Come on. Touchy little sucker. So that's your range right there. From here to here. That's the expected range that Google's pricing in by Friday, which is just right there. So somewhere between going up here, coming down here, that's what the market makers are pricing in for Google. If you buy any kind of option in here, you're going to need it to break above here to make money, or break below here to really make much money. All right, that's what the market makers expect. When you hear people talking about expected moves, that's it right there. In a nutshell. 1120 up, 1120 down, and that's what we got. That's what we're cooking with. Cooking with nitroglycerin. All right. Tesla. Same sort of thing. Here we go. Now, price pattern wise, downside wouldn't shock me one bit. Wrongimer already expecting a flush down. Wrongimer works for Tesla, in case anybody missed that along the way. And so same deal, right? How do we figure it out? Go back to the option chain. If you didn't know, TradingView now has options. We click on this. Go to July 25th, this Friday. Pop down at the money, 332.11, which is really darn close to 332.50. Only 40 cents off. Take the bid on both sides. This one's spicy. Spicy. So we've got 1180. 80. Oh, I can't write numbers very well. 1205. They're not quite balanced because, well, it's not perfectly right on the money. And there's more premium on one side. Actually, pricing a downside move a little more aggressively. How do I tell? Check this out. Go one strike and one strike. Well, you could go here, I guess. But you go one strike and you look at the premium, like 1335 versus 1305. Second strike. Go the second strike. 337 versus 327.50. Look at the premium. There versus there. Higher. A little juicier on the puts. Just a little bit. Just a little bit. Going down a little bit more. 1630 versus 15. They really don't expect much up move. That's starting to be much higher for a down move than for an up move. It's 17. That's how you know they're anticipating further downside. Anyway, back to the math. 5, 5, 5, 8, 8, 3, 23.85 is the expected move right there. Now I sold a 380 strike call against my shares. Got paid $1. Collected $1 premium for that on those 380 calls to agree to sell my shares. Basically, my cost is like $3.25. It was sitting at $3.30 when I did that, though. So that's $50 of upside plus $1. So $51 of upside. Committed, locked in. If it pops big, that might be what I have to do. So $23.85, basically $24 expected move. Pop back to the chart. See what we got. 23. Yeah, there's my $50 move right up there. That'd be pretty spicy right up to the target there. 23. Close enough. 23.75. And we drop down 23. So you have to go both sides. You can't just forget one or the other. So pretty close. There's the expected move right there by Friday. That range, funny enough, check it out. It's where the roadmap line is and where the prior high was. Interesting. Now, if we go down, I do expect a visit of this area down here. So that would be an outperformance to the downside. And my short call, where I'm agreeing to sell those shares at 380, right up here, just below that 1.1448 targets, if we had dropped all the way down here. So there you go. Any questions? Hopefully that was helpful, beneficial, informative. How you do any expected move, not just an earnings move. It's any expected move on any option from now to expiration. So you want to know what they're pricing in for Tesla out to the end of the year? Easy peasy, lemon squeezy. You just go out to the end of the year. We don't have an exact December 31st, but you go at the money, which they don't have a 332.50. So this one's right, kind of actually closer to, just slightly closer to 330. So you grab that 48.40, you grab that 41.65, add those together. That's 89, 90 bucks basically. $90 range between is what the market prices in between now and December 19th. About $90 up and down. So it's actually a $180 range. $180 range. So what's the market pricing in? That's the poor man's way to do it. Like you can do some statistics and this, that, and the others, and use a bunch of tools and calculations and get it tighter, but doesn't matter. Nobody knows for sure anyway. Till we get there. To me, this is a pretty good, fast way to do it. You can usually pop on there and look at it. Know that that's the expected move, and that's kind of the range the market is expecting it to play in. Now, of course, by the close tomorrow, we could be up here and the range moves up, or we could be down here and the range moves down. It's just the way it goes. They're not likely to bleed much premium off between now and the earnings announcement, because the earnings announcement is the key driver of implied volatility, which is implying the move that they're pricing in. So that is what they call a known unknown. Like we don't know what the reaction is going to be, but we do know it's like there is going to be some sort of reaction. We don't know if it will actually stay in this range or bust out of the range. Now, the market makers, the way they're pricing this, the pricing algorithms expect it to stay in here. That's why there's money to be made if you break out of the range. And some people play it, they sell a butterfly or whatever right at the money. That creates this weird little thing like this, where if you get outside the butterfly, you lose money. Outside the butterfly, you lose money. And if you nail it right here, you make big money. It's never been I've not had good luck doing that, so I don't play that way. And I tend to get the directional plays right. So if you want more information on butterfly, just go to Investopedia. That's what I recommend. I don't play them. That's just, I've probably traded butterflies 50 times in my life and made money, memorable money on butterflies exactly 0 times. At some point, you just decide it's not worth it. And the problem I've had is they're not very liquid to get out, even on liquid stocks. You have to fill it in multiple pieces, and you can't ever get it filled in one big order. If you do, you get so much slippage, which is the difference between the quote price and what they'll fill you at is so big that it's like pointless to do it anyway. Like it's all in theory and not in like practice. So the realities of stock trader. That's just one of those hard learned lessons for me. Try it like 50 times. Doesn't make money. Move on. I don't trade them. Even though it looks glorious, and occasionally I'll be like, oh man, that's priced so good. If it actually works, I'll try it. Then, of course, I never make money. Even when I just threw a few bucks at it. So, be careful playing those. My warning. All right. So, let's go hit some other markets. You can go back to the regular morning show if you need to see some other stuff. So, I'm just going to look at my market dashboard. I'm thinking about building a website. Let me know if you think this would be helpful. Thinking about adding to one of my websites, possibly, maybe even like have one of my bots just post it into Discord as some dashboard lights, where it just kind of shows us between, 0 and 100, like where we are on each of these each day. That we could just pull up and like look at the dashboard. S&P 500, the 20-day, 50-day, 200-day, all kind of hang out in the middle. Like we've pulled back off the top. That's kind of indicating that we might be heading to the bottom again. If you've not ever seen these before, we tend to oscillate, right? We tend to go from the bottom to the top, top to the bottom. This is a series of lower highs, probably set to push this down. We're probably setting up for some kind of big market flush out. Today, tomorrow, next week, I don't know. That stock's above their 20-day. We've already topped it out. Probably going to push it lower. Stock's above their 50-day. And we've kind of already topped this out too. Now, I actually have 90 drawn on here because anytime we touch 90, usually it's imminent that we're going to go right back down. And then stocks above their 200-day. This is indicating that we still have, when you hear about gas still in the tank and all that stuff in the mainstream media, we still got some. We've been down here. Doesn't mean we can't go double dip, but typically once we've been at the bottom, we come up at least halfway. We usually make it the rest of the way. Slow mover, but see this way, this one came up, came all the way back down, and then came all the way up to the top. So it's possible we come all the way up near the top, take a trip back down before we come up. It's possible. Anything's possible. You look at it before, from the bottom, right up to the top. Now, interesting to me, don't get too complacent on this. This was the top right here. May of 21 or April 21. And the stock market topped out right here. That was the actual S&P 500 top right there. We had already drug it down pretty good by the time we started down the path. And then that was pretty much the bottom right there. So this did bottom out when we bottomed out right there. So this was indicating weakness all the way down. And had I paid closer attention to it, I probably would have been more ready for what we got in 22 than I was. I was ready for the bottom, but I wasn't ready for what was coming. I tried to stay bullish most of the time in here. I'm still a new guru, still full of myself, because I became a guru right at the end of March right here. Right at the top. Oh, when that great timing. So I struggled and struggled and struggled and struggled. So all my bullish trades were getting beat up. Hard knocks. Anyway, learn some stuff. Try to do better every day. Now, stocks above 20-day for Nasdaq. I don't have the gauge lines marked on here, but you can see we've been up all the way up to 90. Right here. We already tagged 90. Pull back, lower high. Guess where we're going? Sometime we're going down. Probably going to take the stocks, Nasdaq 100 stocks above their 20-day. This is the... I was reading a quote this morning, or I posted a quote in Discord and had it posted to Telegram that this was the longest period of Nasdaq 100 stocks above the Index 100. It's the longest period above the 20-day moving average for the complete index that we've had. 60 days in a row. Longest period we've had since 99. And it's the second longest period we've had since 1985 when the Nasdaq became a thing. So this is a little bit unprecedented here. We've spent more time above it than we have since all the way back in 1999. What happened in 99? You remember? Right after 99. Bueller. Anybody remember? Anybody trading back then? Uh-oh. Uh-oh. NDFI. Topped out. Also, that's a reversal pattern. Head and shoulders type thing. Back to the bottom. Not that the chart patterns work on here, but that's a classic head and shoulders pattern. Lower lows, lower highs. Bottom is probably coming. And Nasdaq stocks above their 200-day. Whew, we've been way down there. All right, we're actually higher here than we are on the S&P. So 80, not that far away right there. Why 20 and 80? Well, if you look at the long term on this, 20 tends to be about the bottom. And 80 tends to be like we don't spend a lot of time above 80. On Nasdaq we spend a little bit more time than we do on S&P. 20 and 80. Now, Russell, whew, that's a lot more volatile. So this is Russell above the 20-day. We've actually been up above 80 on Russell. Lower highs coming across. Probably going to take it down. Why am I bearish on Russell? Because its big chart pattern is like this. And we have the potential to go down on this chart. Look at the R2FI. Been up here. Potential to go down on this chart. And we look at the R2TH. 200-day. Potential to come down here. RSP. Now, got two schools of thought when I look at this. This is the equal weighted S&P 500. Either we're going to tag, on the cash index, we're going to tag that extension that I keep talking about, the 63, 65 level. And this may be double tops. See what actually happens. I should probably unadjust this for dividends. So it actually lines up with the fib lines. We may double top here, come up just shy of the top, and then embark on a downswing. It's theory number one. Theory number two is that we keep rallying on the S&P and the market until we max it out up in this area, 193 to 198, and then we push it down. Don't really have a preference on which one it is. Now, my good buddy Michael Hartnett at Bank of America said to watch this. He said, big bearish traders trade bonds. And when bonds break above 100, Game on for market correction. Saw that in April. Actually got a warning sign in March. Pulled back and then big dip. It broke above. Actually, warning at the beginning of the year right there. Dip back down, ran back up, dip back down, really ramped back up into the April low. But that's nothing compared to what we did back here. Lots of volatility. So that's a warning sign right there. Break above 100 on move. That's my market dashboard. Set of tickers right there. This one also one that I keep on. I haven't historically kept an eye on, but this is something I keep up with. Might, put it the right way. This is just S&P 500 price to sales quarterly. Look at that right there. Never been higher. At least not in the last 24 years. Over the skis right there. Watch out. That's kind of the market outlook dashboard right there. Look at a few futures things before we dive back in. Oil churning around here. It's back on candles. If we break through that support, probably going down to 50. Brent, same kind of thing. Banging its head on the roadmap line right here. Banging its head, banging its head. If that rolls down, back to the bottom pretty easily. Maybe even make an extension because this only really looks like 3 waves up. First move down, retrace, bounce down, extension. Probably down around that 52 to 55 on Brent. That's European oil. Right in there. Gasolina. Looked like it was going to be a bullish breakup, but nope. Back down. If we break below this low, that's probably 1, 2, 3, 4, 5. Probably got to go way on down. It'd be interesting. Super cheap gasoline prices. We haven't had that in. It was low back here last year in September. These are wholesale prices, not pump prices. But that'd be interesting if gas prices, you can bet somebody that's in the White House is going to talk about how he's pushed gas prices down to the lowest price in who knows how long. Basically since last time he was in the office. Push it back down to the lowest price since the last time he was in office, right over here. Anyway, heating oil, diesel fuel. Actually, still maintaining the somewhat bullish potential. That's 3 waves up, retrace, maintaining the potential to push on higher. So that'd be interesting. It was looking like gasoline might run and diesel fuel drop. Now it's looking like diesel fuel might pop and gasoline drop. Interesting. And natural gas looks like we're about to break down and push lower here. Not surprised me to, since we came up shy of the target back here in April, to extend this down into the target here before we embark on the fall run, seasonal fall run on natural gas. So this looks kind of like a first move down, retrace, second move down. It could push even down closer to $2 on down in here. Silver pushing on up. There's resistance right here at 40. If we swing down to the roadmap line, that would be super for getting in. I'm a trend pullback continuation trader. I missed getting filled on that by a couple bucks. I don't expect this to do the high level breakout. We've got this higher high up here on silver. And then we've got the even bigger one. Well, I guess that's the lower one and that's the bigger one. We've got this one right here. We're going to have to break out to actually go higher. So people talking about the giant breakout in silver. Not quite. We still got to break 50 to be a breakout. So still running behind gold. Copper, red metal. It's a bullish breakout. Like probably not doing the pullback stuff anymore. As far as upside goes, in the face of being wrong, change course. Looking for something up at around $7 probably. Somewhere around in here would be a resistance. If we push on through it, $8 would be probably the highest I would expect it to actually run to. And oh, here's an interesting. I've never shown this before. Let's see if I can remember the ticker for it. Yeah, ZL, 1 exclamation point. And we gotta add CL, 1 exclamation points. Check this out. So soybean oil tends to run before black gold, and then tends to follow it but down. But look what we've got right here. Soybean oil climbing, black gold declining. We saw that over here, and then black gold turned sharply higher. So this is something I've got in the back of my mind, is that maybe I'm wrong on oil. Maybe we're not going to break down. Of course, maybe we do a fast dip down to support at 50 and then come catching back, screaming back up. So the downside may happen quickly, and then we come screaming back up higher. It's been an interesting chart. Even on the daily, you can get a little tighter in here. So we've had this kind of flow together, a little bit of break, and soybean oil came back down, but then they came together, went together, and then now they've diverged. And this one clearly going up, this one. So we've got a divergence in this right here. No, I don't know the move ticker, and I have no idea. It's the Bank of America Bond Volatility Index. So I have no idea. I don't use Thinkorswim very often. I do have it, but I don't use it very often. Sorry, Carla. So there you go. That's an interesting one right there, I thought. You can let me know what you think. Correlated when they're correlated, not when they're not. But the CME actually put out the article. I read that, this commodity, what is it, Chicago Mercantile Exchange put out an article that they believe that soybean oil leads crude. Why that would be, I have no idea. Like, what's the reason for it? Now, interesting here, we didn't see any kind of big dip. Like, this was an oversupply situation where that pushed oil negative, but we didn't really get that in soy, but it did. We did see that lead oil higher, and we're actually downtrending right there. Oop, try to pull the chart over. Interesting, I think. I mean, I'm always looking for new stuff to look at, different ways to look at the market. So I've not really talked about that one before. Another interesting one, haven't really talked about much. And if I click on this, it's going to BTC divided by. Let's take gold out of the, or take dollars out of the equation here. Oops, did it upside down. CL1 exclamation point. No. I did it gold. I was trying to do gold and did oil. That was the problem. C1 exclamation point. There we go. So this is Bitcoin, gold, and you take dollars out. So this is just You know, there's no dollars, no dollar. Like dollars were on both sides. So this is actually Bitcoin per ounce of gold. You can think of it like Bitcoin BTC per OZ of GLD, ounce of gold. Interestingly enough, on this chart, got to move up, retrace, initial move up. If this does the absolutely beautiful correction type situation, they stop at 38, lower high. But if we push on up through, 43 would be the target up here for this next expansion. Then we see a pullback and a final move. And somewhere around 50 or 60 might be where we top out on this thing. Could get a little spicy. Pull back, and then maybe 50, maybe 55, maybe 60. So when you look at the ratio here, see how we double top back here. Right now, this is running behind. Opportunity for catch up. We may see now what could cause this, like gold pulling back or Bitcoin ramping faster than gold. So that's kind of the, if they both go up, Bitcoin would have to go faster than gold to cause this to go up here. And if gold pulls back, Bitcoin goes up or just stays still, this will climb up in here. It's an interesting chart, I think. We did pull back 50%. This is a bullish setup, so I would really kind of expect a pop up into this 43, 44 area. Continuation up there. Maybe a pullback and a finishing move. Right there. I find that interesting. I don't talk about that very often. I've pulled it up a couple times. Somebody had commented they wished I would look at some different charts in the 30 minutes of awesome than I do during the morning. So there you go. There's some different charts right there. There you go. Figured it out. Toss this move, :GIF. Congratulations. All right. So Omar asked what I think about quantum computing companies. I think they're complete garbage. Vaporware and hypeware and there's not a single application right now. Everything's theoretical. You know, we've got some processors that can do a few bits, you know, maybe even 1,000 bits, but you know, there's not a single algorithm that they've actually developed that can run faster on a quantum computer than it can on a traditional supercomputer. Not a single algorithm. So where's the money? Lots of hope streams and vaporware, but not really anything that I would hang a hat on. And there you go. All right, set time of the day. We take requests for at least 30 minutes. Now, the rules of the game, 1 request per person per request. I'll take all the channel members first. That's the benefit of being a channel member. You get priority access on 30 minutes of awesome. And I'll go until done with that. If you're not a channel member, you get 3 requests. So make it your favorite 3. Beyond 3, I'm not gonna entertain those if you're not a channel member. So please use capitals. And if you got a question that goes along with it, please write in complete sentences and reference the ticker. Don't just say it, this, that, these, those. Don't use vague language. Please refer to the whole thing. If you say like, I really like that, please tell me what the heck that is, because the chat's going to run way ahead of me. All right. Thanks. And we'll hit some tickers here. Riley. Yeah. That went in the toilet. That one's rough. No sign of recovery there so far. No reverse split. Insiders had heavy insider buying. I don't know if that's still the case. I used to keep that up, but that looks pretty bad, honestly. could be a opportunity to be taken private, and you'd have no say so. Certainly not a reversal type situation. I'd be very careful here. You wrote it down. It's ugly. It's the downside of getting caught in. They bought out like Bed Bath & Beyond and then got whacked when Bed Bath & Beyond couldn't really, salvage. So kind of got caught. And FCX should be performing, but it's not breaking out like copper. It's interesting. We're stuck at this zone of resistance here. If we can get through this prior high, right around 52, upside targets right around 60, 62, 70 even. But if we did spike it up in there. If we reject, break back below the roadmap line, this is a very real target down here. Low 20s. Not feeling particularly sparky about this because, well, it's been going sideways for 4 years, pretty much. Look at the current price, post-market. 4 years. That doesn't speak to me and say, hey, this is a banging opportunity. I think you should get involved because I'm a trend pullback continuation trader, and that is no trend. That's just sideways bullshit. So, sorry, don't have better. Sorry, talk trash about your sticker. Anyway, EW, Edward Life Science, that's a downtrend. What we got hiding over here? Regular split, yeah. Downtrend. As long as we stay above the COVID low, everything's okay, but we may go revisit it before we go higher. And this again, sideways for 6 years. It's not exactly, oh, sure, we ran up to 120 and then we're back down 50%. And golly, man, don't trade garbage like this. Just, that gap down's resistance. Doesn't look like it's going higher at this point. Carvana. Man, rocket ship, baby. We're close to the all-time high. It'd be a shame to come all this way back up here and not retest it. I've not been a fan of this company, but hey, rock and roll. Watch for the breakout. It's almost like double trouble, right? This did the same friggin', look at that, same pattern. Boop. Same pattern. What do you think is gonna happen this time? Something different? Or boop. I'd bet on this. But that's just me. As far as what it looks like, there's the high, there's the low. Struggling, probably going to retrace. That's topping out signal. May need to retrace back down. Visit the roadmap line, or the roadmap line may need to come up at some point over here, and something over here. I would expect price to come back down in here, and somewhere in this big blob. That's what, 275 to 325 roughly. Meet up with the roadmap line. Then we'll see if we break through it. Deeper correction. Okay. If you made lots of money on the move up, I'd consider where the exit door is. Domo. Arigato. Why do you keep pulling up? Why do you bring me this garbage? Every week we look at garbage like this. And now's not the time. This thing's finally reversing. Oh my gosh, it's up 200% off the low. We're just filling the gap. Be careful. Look at that solid resistance right there. We're going to have to break through. Now, let's see. Annual, no great. We were ramping revenue here the last 3 years, not doing that. Net margin's been dropping, running the negative, carrying lots of debt, free cash flow Negative, positive, 0. Negative, 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 negative. It's not exactly the most positive set of data I've ever seen right there. So be careful. That might go back to the bottom. It's danger. All those things flash danger to me right there. I know how to do fundamental analysis. I mean, most of the time, I don't find any value in it. When I see a nasty chart, I go look at it, and usually there's a good reason why it's a nasty chart. HIMS, this has got a potential 1, 2, 3, 4, 5. Absolutely beautiful correction. May come lower than that right there. That's what I expect right now. Big final leg, but it could also be a 1, 2, 1, 2. We got a really big 3, 4, 5, 4, 5, and it take it all the way down like $10. That'd be vicious and nasty. It's another bubble potential right there. Be careful. I'm off the HIMS right now. PPP or PPTA. Finally something repeatedly trending, bouncing, trending, bouncing, trending, bouncing, trending. 18, 19 episode. And then watch out for another bounce. TSM. Well, we hit my target. Just took a little extra time. Watch for a pullback. Now, if it can hold the breakouts, we tested right here. We came up, struggled, bounce, and come back and retest it again. If we hold on to it, make it up to 252. If we don't hold on to it, that's support down here. Where we consolidated a lot. That zone right there. 190 to 210. All right. AEHR. And so, surprise, surprise, we came up, tested the gap, rejected down lower, came up again, tested the gap. We'll see what happens. If we break through, next resistance is $8 higher, 30. It's another one that's just been sideways chop. Sure, we took a big run up and right back down. Bubble pattern. If you've not seen the, in case anybody needs a refresher, bubble pattern, you can Google market psychology. This is just the way humans operate. We tend to hype things up. We got to tell everybody we know, and we're going to brag about how we're all going to be rich. And then it's okay. No big deal. We just need to cool off a little bit. Uh-oh. Why is it going down? No. It's a good stock. Like, everybody wants to get into it. Oh, crap. I got to sell. I'm getting out 100% before I lose all my money. Gosh dang it. Why does it keep going down? This was a good stock. It should have gone up. Right? Heard these things before? You've been around trading long enough to hear this stuff? I've heard plenty of people say that stuff. This is very much realistic right here. Maybe you've thought of some of these. Oh, here. So be careful. That's one of those. And potentially doing it again. We tend to do the same thing over and over on some stocks like GME. Does it over and over. Over and over. Lower each time lately. This one, the big one, that's doing this right now. But it's done it before. Doing it again. Even though this little spike right here was 10% of the whole market yesterday. 10% of all the volume. Topped out right in the same place. Guess where we're likely to go. Once the bubble ends, right back down to the bottom. So just be careful. It's your money. Bull. Weeble. Weeble, weeble. Guess what that looks like? Fast paced. And can we do it again? Can we actually break out of it? I don't know. Like, that's not enough candles. We haven't had enough to give me a roadmap line or anything that there's no trend. Trend is basically sideways. This is certainly no Robinhood at this point. So hood is actually looking pretty good. You look at E-Trade's chart. And they're at banging near all-time highs for Morgan Stanley. Owns E-Trade. Got Schwab that now owns Charles Schwab now owns Thinkorswim. Bought it out from TD. Up here, I mean, yeah, trading looks pretty good, but bull not looking super great. Even IBKR, Interact Brokers, you know, seeing the same kind of chart on most of the brokers, but not on Webull. Of course, Webull's like a just launched IPO, so CAG. Ooh. That's where the trend is on that one. How low can she go? 0. That's the answer. Support down here, 13 and 17. Yeah. Oh, that's even part of a bigger correction. Nasty. First move, retrace. Yeah, we're in the corrective territory. So look for 13, 17. This area. Right in here. Expect it to kind of hold there. Break back up through all the different roadmap lines. Daily, weekly, monthly. Signal we're going on up. That's been a big correction for a long time. Yeah, we made it. It could push on down here to the 13. Bottom of the vicinity of this bottom. Before we turn up. Alrighty. Nasty chart. Be careful. McDonald's. It's got a bullish bounce potential. That was a 3-wave retrace. 1, 2, 3. Held support. Pretty good. Holding resistance. Pretty good. 618 retrace. Bust it back up through. Get through the 618s. Push it on up. Target 330. 335 above that. Always round down. Hey. WC. Same target we've had. 112. I'm actually in this with an order at 112. I'll be right here waiting for you to fill me for the exits and get me out of this trade. And rolling on down, rolling on down. Chewy. Sitting on the roadmap line, looking for the bounce. This is an absolutely beautiful correction. A, B, C. We could push it a little bit further, proportion-wise, down to 34 to 36 before we get the bounce. Upside target 50 if we do it. Right there, I'm going to be, I'll probably be taking shares unless we bounce by August 1st. Probably taking shares in one account. I have 39s sold for this Friday in my 50K challenge account. See what happens. Maybe I'll roll those out for more premium than I could if I took the shares and sell the calls, but we'll see. We'll see. We'll see. We'll see. COC is not a ticker. Cost is a ticker. This is bearish. I am bearish. Costco, looking for that drop. A, B, rolling on them, rolling on them. TAO. Chappy. Right there. TAO. And is there a use? Which one are you looking at? None of these are US listings for TAO. Hood. Breaking out 109. Watch for the pullback off of 109. And I can look one more time. TAO. It's a bit sensor. You're looking at that one, I guess, down there. So USDT. And there's no, I would usually go to Coinbase. There's no Coinbase. Binance, maybe. I don't know. Lower high. All the way down. That's what that looks like right now. And REVG. Retrace to the roadmap line right there. And Oklo. There's your pullback. There's your continuation. Topped out. Retraced. Held the breakout. Pushed up. Held the top. Indicating that we're going on a bigger correction. And yeah, no problem. Hymns. Retracted message. Estee Lauder. In the gap. Resistance there. Grinding it. And we've got this prior high right here. On up at 104. Break up of that. Got consolidation right up here at 150. Did scrape just shy of the target. If we can actually reverse this thing, get it moving up, potentially even back test the roadmap line, bigger upside potential, monthly charts, giant big bounce potential, but we got resistance coming all the way up through there. All these prior highs, this big consolidation at the monthly roadmap line right there. We can bust through that at 150. Starts tipping the odds we're going to do this. That's big numbers. Really big numbers. Crazy big numbers. But that's what we got, potential. This bottom from right back here in 2008. Massive run up, massive retrace. Boom. Boom, shakalaka. Probably do, I bet they do some sort of splits or something before they get all the way up that high, but that's what we got cooking. And yeah, I got your TAO as a crypto, but you should give me a full ticker, not just TAO doesn't come up as a crypto. Part of the rules, I'll give me the full ticker. So you don't see, you know, TAO doesn't come up as just anything I can just type in. All right, and running back up, grabbing the subscribers. I do appreciate you being subscribers, but due to people abusing the channel request feature, I've limited it to 3 tickers per person. So my discretion, I can take more, but just let you know. CMG. So we've got this ABC potential locked in here. Beautiful. Proportional. Move up, retrace the roadmap line area. We may be actually doing a 618 retrace, which can take us down to the 49 area right here. Find support, push higher. Earnings are coming up right there. Makes the everything extra spicy. Chipotle, extra spicy, get it? And so that'll be interesting. If we can break, actually hold support, break higher, target 73 on the upside there. Beautiful UFO. And potential to top out at the prior highs, triple top, and we're coming up into it right there. Be careful. 1618 sitting at 32, so that may be the resistance right there. Pull back right there. All right, IBM. Yeah, that's so it broke out. May retrace to the breakout. We came up to the right above the 1272. Trying to say 272, 1272. Came up shy of the 1618, so we could hold the 1272 and then push on up into that. We may push down closer to the breakout level. Why do I cut the breakout level? We topped out here, we've retraced, then came back up, broke out. May need to retrace that breakout before we go higher. And 1272. That one's 70% likely to get hit when we do this pattern like this. Once we close above the 618, 70%. This one drops down to 35%. So 70% of the time we hit this, 35% of the time we hit this. Large discrepancy there. So just because we break out doesn't mean we're going to get continuation without retracing. Hey, next up, QCOM. Chopping around at the roadmap line. Nothing has changed here in the months and months I've been talking about this. That's resistance. That's support. Took a dip down, pushed the limit, came back up in the zone. More sideways. Coin. Already hit the target on the upside. Be careful. Can retrace to the breakouts. That was back at 350. Before we can get the mustard to go higher. And if we break down, roadmap line is way down here right now. Somewhere down around 280 to 300. By the time we got down there, maybe. We just sudden deathed it, 260. So first line of support, 350. Could we hold 400? Maybe. I think probably a week. Like we didn't really stall there on the way up, so we just went right on up to 1272. So primary expectation would be a retrace back into that 350 area. If we can hold it, maybe we take a trip up to there on that 600 area. Learn. Back down to the roadmap line, looking for it to hold. If we don't hold, deeper retrace. If we do hold, 618 resistance, and break higher to the target. What does that look like? It looks like this right here. This high, this low, right like that. 618, right at that high. 148. Break above that. Target 168, 173, right there. Now, if we break down through the roadmap line, very easily could retrace this whole breakout move. Same situation. This was a pullback and breakout. Could very well retrace the breakouts and see if it can hold. If it doesn't hold, watch out below. It's got this habit of pulling down and then jumping higher. Pulling down, jumping higher. Pulling down, jumping higher. Pulling down, jumping higher. It's an interesting, it's kind of like they sell into it and then pop it higher. Interesting pattern. Snow is not doing anything. Sitting at that resistance. Kind of glad I sold out the call. That would have just been grinding off premium right there. My bullish primary expectation was a pop to that 259 area. That confluence almost exactly right on each other right there at 259. We're struggling to get through that 1272 though. mainly because that's where the gap fill is. See that gap fill? We're grinding it, grinding it. It's resistance, there's supply, there are people that bought there. Just they're now that we've come up there, like probably I should probably sell. Once we can get through it, probably pop it up in here in that target, and then maybe get a bigger retrace. We'll see what happens. Holding my one share, that's all the exposure I got to snow right now. Holding the one share, I bought it down at 100 or whatever, 110 maybe it was. KMI. Three-wave retrace, 1, 2, 3. Coming up to resistance, back down to the roadmap line, holding support. We can hold it, break back above. Extension, probably somewhere around 33. At 32.70. Right there, break above. So resistance right at 29.50. Target 32.70, 33. And if we push down through here, we may come on down. Could be an A, B, C. Downside supports. First move, second move, third move will be down around 22 right there. And Intel, INTC. Resistance. Watch out for pullback. Grinding the low, grinding the low, grinding the low, grinding the low. And we're gonna have to get through this set of 3 highs. That one, that one, that one. That's major resistance going higher. That was cool. Crashed. Trading view. Cool, bro. I avoided all the stuff I drew already. Awesome. All right. Next up, circle. Circle, circle. So remember all the things I said about that bubble pattern? Whoop. Choppy stuff. Breakdown. Despair. Nasty. That's what we got on circle. You can believe. I believe in magic and going higher, but that's not the reality of what we got. So be careful on circle. I'm not actually keeping up with the three tickers requests per person, so just don't abuse. So KSS, Coles, that was a giant pop today, but kind of rejected. Long term, looks like a downtrend to me. I believe that that's a downtrend. My goodness. It's like a downtrend with increasing down volatility. I mean, even if it comes back up, look at this. Dip, bigger dip, dip, bigger dip, bigger dip, bigger dip. That's the pattern, right? I mean, these things tend to repeat. It's not magic. Now, potential that it bottoms, but it's not like an Elliott wave pattern. That's just being a crazy stock pattern. Oracle, yeah, shooting on up 270 upside target. Could retrace, retest the breakouts. Yeah, didn't break down. Higher, baby. So supports all like down in this zone right here. We consolidated a lot at that 1448, 212. Right there. So we may come back and visit that. And then pop up. 270 on the upside. Already coin, PLTR. Yeah, we're just grinding that. So we came down, retested, popped up a little bit higher. May need to pull back. 137 would be my support level. And the next upside fib line right up there at 186 if we're going that high. God, I used to trade this one with $7. So crazy. I had a crap ton of this at $7. Several hundred shares, maybe 1,000 shares. Traded it all through here. And like got out at 22. I got out right here. Not a bad trade. If we break down below that consolidation right there, roadmap line. And then the other thing to consider is this is starting to look like 5 up. Now, which 5 up is the final 5 up? It's a good question. One of these is going to be the last little oomph. And then the pullback. That looks like an extension of a 5th right there. 1, 2, 3, 4. 5th wave, crazy extension. 1, 2, 3, 4, 5. Guess where the 4 was in the next lower degree right here. Can bring it all the way back down when the party's over. Maybe like, nah, they got this on lock. You don't understand. I've heard this all before. Everybody says the same thing right before stock falters and goes through some big correction. Don't have to. It never has to look back, but net income is relatively tiny compared to, I mean, the price to sales. This is what I look at. Price to sales, 69. That's stupid. Price to sales at 20, reasonable. Price to sales, 69, stupid. Anything over 20 is pretty much stupid. Anything over 30 is definitely stupid. That's 30 years of all of their sales. You're like, well, that's a growth stock. You don't understand. They're going to grow revenue so high. It's going to cover all that. Okay. Look at that. P&S ratio, 124. Stupid. It's stupid. Stupid numbers. That's danger. Danger, danger, danger numbers right there. Price to earnings 660. You know what that says? That's 660 times their earnings to afford the stock price. That's 124 times their sales, all of their sales, no costs included, to justify. That's 124 periods of sales to justify the price. They're going to have to grow like a mofo to justify that. Now, NVIDIA has been growing its sales like crazy to try to justify it, but still hanging out up at right around 30. Actually pushing it down. It's nice trend. I like the trend. They were up here. I was warning. And still in the danger category for me. Anything over 20 is cautionary. But TLTR is redonkulous. Like, that's gonna come back. Like, Amazon ran high for a long time, but right now 3.8. Not exactly growth company status anymore. All right. GLXY. Galaxy Digital. I should save my password, I guess. And here's the big pullback right here. High, low, coming up. Looks like we're going to do an extension to 56. Possibly 79. And then, let's see, that low, this high. Looks fair for a measured bounce. It's a big, long, slow one. Usually stuff that's this depressed doesn't just come back to life, but oh, this has got like, there's got to be a reverse split in here. These numbers are too stupid. There's a reverse split. Is there another one in here? No. Just the one, huh? I figured they would have done one here. And just because that reverse splits in there, it's like on the do not trade list for me. But potential to come back up. We'll see. It was never this high before. That reverse split screws with the numbers. So. Hey, AVGO. Already hit that one, but there's the upside 195. AGQ. Oops, skip CVS. Sorry about that. I'll circle back. AGQ. This is leveraged silver. Hitting target 56. Charlie Victor Sierra. Oh, ABC. Absolutely beautiful. Correction potential down here is the target. 54, 56. Right there. And cake. Sorry you feel limited by 3 requests. There is no request limit on a channel member, though. So for $5, you'll have no limit. Cheesecake Factory trying to break out. If we reject the breakout, retrace the roadmap line. If we can actually break out, which has been sideways for a long time. Why would this be any different? I don't expect it will be until it is. For the last 10 years, it hadn't been able to get above this level. Is it different this time? I don't know. If it's not, watch out below. May just take it back down to. Now it could be bullish. I mean, this potential 1, 2, 3, 4, 5. Probably doesn't have much gas left in this tank. If that's the case, that's the bullish move off of that low. Yeah, we're topping out. So watch for support in this vicinity at 44. If we retrace, if we hold that and push higher again, that sets up the bigger upside potential. And we could be looking at something up in that 300 area. If this were to retrace right now, hold that 44 area, break back higher, it could make a epic run. I don't trust it to do that. Had a lot of trouble breaking out, but that's the potential there on cake. All right. iBits is just Bitcoin. Should come visit in the mornings. 76 next upside on the charts. CSCO, Cisco. Talk about one that's got whacked long time ago. So we did this pullback. Came up, bounced down, coming up through, hit the 69 resistance. Watch out. We could hit 73 and it could go up to 88. All off this last pullback. Not really big numbers, but slow mover. There you go. And next up. MSTO. Resistance. Might pull back to the roadmap line if we can push it on up. Targets up here around 600. Things get extra spicy. Go even higher. I talk about this most mornings, so not a lot changed here. And IMO. Resistance 85. MU. Support at the roadmap line. Turn down pretty violently off of that. Coming down. And potential go back up higher. Turn down off that gap. That's another prime example right there. Turning down off the gap. Right there. Took it all this time to fill that gap and rejected. And now we come back up through potentially to the targets. Can it hold on? Beyond Meat. That's in a giant downtrend. Just a little blip off the low at this point. I don't know. Down, down, down. Beyond is going down. Down, down, down. There's not a time frame that makes that look like we're reversing. We've poked up through before. Done it once, twice, 3 times, 4 times, 5 times. This will be the 6th time. What's happened every time before? Lower low. Be careful. I have no confidence that that's a reversal of any sort. We're down in meme stock territory at this point. Below $10. Liquidity's low. Volume's low. Yeah, be careful. Already did an MSTR. Somebody removed their message. Harmon KO. Sitting on the roadmap line. If we can bounce up. Extension higher. We didn't hit the 75 target yet off the last bounce. It's like secondary bounce, tertiary bounce, quadrary bounce. Making lower highs, though, is the problem. I want to see this pop through that resistance and get the extension 75. MTN, big upside potential is on a large time frame. Big move up, big retrace, held support barely. It looked like we were going to go ugly. Turned. If we can break back up through the 200 area, we could take this up to like 400 to 600 pretty easily. If not, on up to crazy 900 area. One step at a time, though. Resistance along the way. Got to get through the downtrend of highs. Got to get through the roadmap line on many time frames. Trying to push through the daily. Got that downtrend of highs cooking in there. So a lot of resistance coming up right up here in this 175 area. Got to get through. Ideally, we'd pop up through, back test, and then once we break up higher, it's game on for at least that next resistance up here at 260. Get through that, bigger upside. Maybe back to the highs. All right. Next up. Yeah, Mora. I cover that so much. We're just sitting at resistance, grinding it. That's the resistance right there. Here's support right here. Target would be, or next resistance would be these highs that we rejected once, twice, 3, 4, 5, 6, 7, 8 times. So significant resistance to get through that 26 area if we can. Bigger upside targets. This stock has a habit of diluting every time we get in this area, so be like that may be the factor that keeps it from going to targets is stock dilution. So be careful. If we start getting dilution, they start selling shares to the public like crazy, probably time to GTFO. Probably not going to perform if they start diluting it. It's just a warning. And look at Sunrun. No big reversal in sight. Lower highs. Be careful. Can easily go lower low. 15 could be an upside if it can break higher here, but that's still a lower high. Still probably on a big downtrend. Baidu, probably still almost the same chart. Probably still in a downtrend. Just grinding on the roadmap line there. NEE, kind of the same chart. Grinding here. The resistance 170 or 177 at 77. Excuse me, misspeaking. This resistance right here. If we get through that, we might be able to see a rally back to at least 86, if not get to the 89 target up there. Off that, or pull that all the way to the bottom, I guess. Be better. And 90 target, 89, 90. Didn't really change much, even though I pulled it down quite a few bucks. T-Rex. A, B, C potential, but we did hold in a measured bounce force. Measured bounce proportion. That could set it up for a bounce up here at 132. Got a lot of upside resistance to go to get up there. Talking about breaking through this prior high, which, look at that, gap down again, like came down, bounced, people bought, gap down, retraced, those people got out, and it went further down. Now we're working on getting bullish, but we need to come up here, break through, get through the gap, all that sort of stuff to go higher. And the bigger target could be even higher. But if we're going to be super bullish, 237 would be the upside target. Maybe this first move, retrace, next move, retrace, and next move. On up there, probably to 447. Not everything has potential like that, though. TSM, I already went over that, hitting the target 245. Watch for retrace back to the roadmap line, and 262 upside if we can continue. NUE. And struggling. Got lots of layers of resistance here. 227 if we can get through this prior high at 168. And more already covered. MSFT. There's your target, 508. If Apple and all the other Mag 7s pull back, if we get the pullback of the market, we're kind of overcooked anyway. May see this, retest the breakout, then push higher on the next rally into some sort of major market top, 565, right there on Microsoft. And we already talked about PLTR. And BBAI. And potential to go on up to 1279, possibly 15. Already did Mora. Check it out. MO. And grinding, but this has a bigger potential target. Let me pop this up a weekly chart. That low, this high, this low. Potential for this one to come on up into this area ultimately. Right around 97. It's for those who paid attention, my potentially bullish list, MO is on that list. Here's all the potentially bullish: BA, APLD, SARI, Wing, MO, SMR, Love, Win, INSM. Lulu is actually bearish temporarily, at least down for another little chunk, and then potentially very big bullish. CC, GES, DAL, DOCU, WD. These are in no particular order. Rocket Lab, Celsius, United Airlines, Nike, Merck, Pfizer, DJT, Chewy, Kava, Crocs, DG, Dollar General, Dollar Tree, 5.9. I think it's 5.9. Oh, Five Below, excuse me. MTN, Mountain Vale Resorts, that's on the bullish list. Etsy, Restoration Hardware, Lowe's, Home Depot, Cash, Pathward Financial, Logitech. If we can break through, that's bullish. If we bounce off, bearish. DVN, and EH, COO, COP, and Tesla. That's my potentially bullish list right there. Dun, 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 dun. We'll be back, same bat time, same bat channel, 9:15 tomorrow morning, same time as always. We'll do another round of the Morning Monster and check out what's happening, what's popping, what's dropping. I still expect the upside resistance at 63.90 or 63.65. Excuse me, 63.65. And then we'll probably get a pullback, and then we may take it even higher. See what happens in the coming weeks ahead. Be careful out there. The account you save may be your own. We'll see you in the morning.